and good evening. Welcome to the Celiac Disease and the Incremental Tax Credit webinar from the Canadian Celiac Association. We hope that every Canadian with celiac disease will be diagnosed and empowered. If you're not familiar with the CCA, we are empowering Canadians with celiac disease and gluten disorders and helping them live their best lives. For nearly 50 years, CCA has been entrusted as a resource and a national advocate. We're here to help you continue to advocate for safe food, offer science-based education, and invest in celiac research. And our website is celiac.ca. And my name is Melissa Secord, and I'm the National Executive Director for the CCA. And thanks for joining us tonight. We just wanted to let you know before we get underway with the actual webinar presentation to let people know that we do have a client and peer support service. You can speak to a registered dietitian, peer supporters, or CCA trained staff to get information on celiac disease and gluten disorders, and it's all free thanks to our generous donors. And you can catch someone Tuesday through Fridays, 9 a.m. to 4:30 p.m. Eastern, or through an email. We also do have, we're very proud to have our mark on the gluten-free certification program, where you can safely shop for gluten-free products that come from a gluten-free facility that is third-party verified. It's important to have access to safe food, and we have thousands of SKUs or products available on our new GF Finder on our website, so be sure to check that out. We also have a Facebook group with 14,000 peers online where they share recipes, information, tips, but it's also moderated by the CCA and a great resource to connect with other members in the community. We also have contests and giveaways from time to time and polls and surveys. We also have some great publications that come to you direct to your inbox if you're signed up with the CCA. We've got our Canadian Celiac magazine that comes out 3 times a year, and we just published the recent winter edition in early February, and you can sign up for that. We also have our Better Living Gluten-Free that comes out every other month, and this month edition will come out on Sunday. It'll be featuring some budget-saving tips, including some more tips from Lynda Marie Neilson, our presenter tonight. So we do hope that you'll join us in helping empower families and consider making a donation to the CCA to help us keep up with the work that we do on your behalf. Just want to let you know about some upcoming events. For those people who are maybe on the cusp of diagnosis, maybe you have a friend or a family member who thinks they have celiac disease or that gluten is a problem, join us for an informative webinar on Thursday, March 4th at 7 p.m. Eastern with Dr. Mohsen Rashid to let people know about the signs and symptoms of gluten-related disorders. We also have an upcoming webinar for people who are experienced with celiac disease for a couple of years. We've got a nutrition overview for people living with celiac disease long-term. Join our registered dietitian, Gori Bawa, for this informative free session again on March 23rd. You can go to our website to look for details to sign up. And every month we have a gluten-free 101, and that's our Lynda Marie Neilson is one of our presenters. And this is great for those who are new to the diet. You can get a really great overview from Lynda and Gori. And the next one coming up is on March 13th. Again, you can check our website out for details. And I think finally on events, we've got our CCA National Virtual Conference. Last year, we held 2 very successful ones. This year, we're going to have them over a weekend, November 13th and 14th. And we've got 2 streams of programs, one for newly diagnosed and those who've mastered the diet and looking for a little bit more in-depth knowledge along with healthcare practitioners. So how our webinar works, everyone's on mute. Have your question for our presenter and please type them in the Q&A box. This session is being recorded and a copy of the webinar presentation and any handouts will be emailed to you in the next few days. Our speaker, Lynda Marie Neilson. Lynda was diagnosed with celiac disease in 1982 and started volunteering for the Vancouver, now BC chapter in 2001. And she was unable to, and unfortunately she was unable to work due to a workplace accident. So she's really thrown herself into just hundreds of hours of volunteerism for the celiac chapter and now for the CCA National. And you'll see her on our Facebook group contributing with her tips and advice, and also, as I mentioned, leading our GF 101 sessions. And today she's talking about a subject she loves, which is numbers. And Lynda has done taxes for family and friends since she was a teenager. She also participates in Revenue Canada's Community Volunteer Income Tax Program, filling out and filing tax returns for people with low income and disabilities each year. Lynda has followed the Revenue Canada decisions made for celiac disease very closely for many years, and she'll share the ins and outs of the program and why the program exists today, and how you can be assisted to improve your tax position. So I'm going to send it over to Lynda.
Thanks, Melissa.
All right, you can
there we go.
Share your screen. Off you go.
Good afternoon, everyone. Well, as Melissa said, my name is Lynda, and we're going to talk about the incremental gluten-free medical expense deduction that you can take if you're diagnosed with celiac disease. Why is my slide not advancing? There we go. So what this presentation covers, the history of gluten-free related deductions, the definition of what the income tax medical expense covers, what you need to calculate this claim, what is an incremental cost, and the exceptions to the incremental cost calculation, what is considered gluten-free for the deduction, and spreadsheet, and I use that word spreadsheet loosely, for calculating incremental costs, filling out and completing the spreadsheet, and some hints to help you, and who should and should not claim a gluten-free food expense, or who can and who cannot claim it based on some certain criteria, and then some income tax information from the Canadian Revenue Agency, or CRA, that I have every year. I phone them and get some information to make sure that what I am talking about in this webinar is correct. And then lastly, we will try to fit some questions in. Now, a lot of you did submit questions prior to this seminar, and I've tried to include the answers to, actually there's a page and a half of questions, and the first page of questions have been included in the slides, and there's a couple of questions that I will address later on. So first of all, the history of the gluten-free income tax deductions. First of all, prior to 2001, there were no deductions available for any food-related conditions, whether it be celiac disease or people who could only eat potatoes, or people could only eat fat-based foods because of certain types of disorders. So there were no food-related deductions. In 2001 to 2003, which interesting enough was when I started volunteering for the BC chapter, there was a loophole found by someone, and they claimed celiac disease as a disability tax write-off. So that is Form T2201. Now, a DTC, or disability tax certificate, is used for people who have life-sustaining issues or significant issues in their life that 90% of the time affects them, and there is no medication or other types of modality that can help ease that issue. So the CCA went to court, and it was found that people do not qualify with celiac disease for the DTC based on how much time it shops, because this is what the court case was based on, was the amount of time that it takes to shop and read labels for gluten-free food, and also if you have a reaction to gluten, the additional time you spend with the symptoms of a gluten exposure. So it was decided that you do not qualify for a disability amount based on the additional time it takes to shop and prepare gluten-free items. So for the tax year 2004, this loophole was closed. So what the CRA, or Revenue Canada, did instead was create this incremental cost deduction and put it in the medical expense category. So the medical expense category for income tax contains a lot of items. If you go to canada.ca and in the search field type in medical expense, you will get pages on pages of listings of what can go in a medical expense. One of those is this deduction for gluten-free food, the difference between what it costs for gluten food versus gluten-free food. So that was the concession with removing it from being a disability tax certificate. At that time, the CCA lobbied the government for a fixed amount per person, or, and I remember the survey, how much a fixed amount for food. So all I would have to do as a consumer would be add up the number of loaves of bread that I consumed in a year and use the fixed amount for bread. So let's say the differentiating cost is $3 or $4. Let's say they settled on $4 as a differential cost. So it'd be 12 times 4. So therefore, I would be able to claim $48 because they have decided upon a fixed cost that you incur when you buy gluten-free bread. Neither of those were accepted by the CRA. And the primary reason why is for everything that you do with income tax, you need backup in order to do it. So when you want to claim a deduction like an RRSP or a medical expense or education credits or GST input tax credit, then you need to provide backup for that, whether it be a school receipt or grocery receipts or whatever it is, so that the government can say, yes, she definitely did spend that money going to school, so she definitely can deduct that money. Yes, she definitely spent that on gluten-free food. I see where her comparisons are. She can deduct that money. So the whole tax system is based on having receipts or some type of documentation to reduce your tax payable. And then the other thing that they wanted to point out, and they do point out every time I call them, is that celiac disease is the only medical condition where food can be deducted as a medical expense. So if you look on the canada.ca website, this is the official definition for claiming gluten-free food as a medical expense. So you have to be diagnosed with celiac disease, and you can claim the incremental costs associated with buying gluten-free food products as a medical expense. You cannot claim buying a new toaster or air fryer or pots or pans. It has to be food. The incremental cost is a difference in the cost of gluten-free products compared to the cost of similar products with gluten. And then it is calculated by subtracting the cost of the gluten-free product from the cost of a similar gluten product. So what does this process look like? So as I said, you need to be diagnosed with celiac disease by an authorized medical practitioner. So the reason why that is quoted is on the CRA website, canada.ca, and if you go to taxes, there is a document called authorized medical practitioners. And who can actually sign this document varies from province to province, but every province allows a doctor, a nurse practitioner, or a nurse to sign it. A naturopath is only in some provinces. So I suggest you look at that document if you want a naturopath to sign the report or the piece of paper for you saying that you have celiac disease, and make sure it's valid in your province. The next is the note that you need to get from this authorized medical practitioner, which has to be on their letterhead or prescription pad. It's nothing fancy. Mine is on a prescription pad paper, and it just indicates the date of your diagnosis, and you have been diagnosed with celiac disease and you require a gluten-free diet for life. That's all it needs, and prescription pad is just fine. But it has to have their name and address, the doctor's name and address on it. You can only claim food for a person with celiac disease from the date of diagnosis onwards. So if you went gluten-free before you had your biopsy and then switched back to gluten and then had your biopsy and then you went gluten-free, you can only claim gluten-free food from the date of your biopsy. Then you need to gather all your grocery receipts for the date range being claimed. Generally, people do medical expenses from January to December, so you gather all your grocery receipts. And for those items on the grocery receipts, you need to find similar gluten items as cheap as possible for your area and keep the evidence, flyers, online ads, pictures of the items and their prices. And I'm going to go into more detail on this. This is the 35,000 foot view at this point in time. And then you do this incremental cost calculation. So before we get too far into it, I said spreadsheet earlier. I just want people to understand when I say spreadsheet, I don't mean you have to use a computer, that you can use a pencil and pen and a calculator on a piece of paper. That's just fine. Or you can use a computer spreadsheet. It's whatever you feel comfortable doing. So I want people to understand when I say spreadsheet in this presentation that, as my dad, if you've heard of the program called Quicken, which is keeps track of your household finances, my dad's calls it actually slowing at home because he does it all by hand. And so there's nothing wrong with using a piece of paper and some columns and a pencil and recording all your items that way. So what does an incremental cost really mean? It is the difference in cost of gluten-free products compared to the cost of similar non-gluten-free products. And it is calculated by subtracting the cost of a non-gluten-free product from the average cost of a gluten-free product. And that is key because we're not doing a one-to-one ratio here. We are actually adding up all the bread that you purchase for a year averaging it, and then subtracting the cost of one loaf of bread to get your incremental cost. So what are some exceptions to this? One, xanthan and gargum do not have a gluten-free comparison. So they're a specialty item used in baking, and you can claim those straight across because there isn't anything, gluten is in flour, and xanthan and gargum are used as a replacement for the gluten in flour, and there isn't really anything that you can buy to as a gluten comparison. And secondarily, the receipts on bills at restaurants for gluten-free food items as long as they're broken out. So if you go to XYZ pizza place and on the bill it says Lynda's favorite pizza, and then it says $2 for the crust, you can claim that $2 for the crust as an incremental cost. That's a true incremental cost. So what is considered gluten-free? According to Revenue Canada, items that you want to claim have to qualify. To qualify as a gluten-free item, they must be purchased food items or ingredients purchased to make gluten-free food, like baking, that are made under the Health Canada regulations for gluten-free. They must be labeled gluten-free. And that is a really important point. They must be labeled gluten-free. Naturally gluten-free foods or ingredients that are not to be included in the claim unless number 2 applies, such as flours for baking. So, for example, if we're going to buy a bag of rice flour or tapioca starch at the Asian market and it doesn't say gluten-free, you cannot use it to claim for an incremental cost because it doesn't meet the Health Canada regulations for a gluten-free product because it was not made specifically for people with celiac disease. Therefore, it's not labeled gluten-free, so therefore it cannot be on your spreadsheet. So from the Revenue Canada website, I'm not sure if they still have this chart up here, but this is the chart that they had from a couple of years ago. This is how they like you to calculate it. So whether you're doing it by hand or on a computer, this is their calculation. So as I mentioned earlier, it's not a one-for-one type calculation. So if you're buying white bread, brown bread, raisin bread, cheese bread, they all go in the bread category and total to the number of items purchased. For all those breads that you purchased, it's going to add up to a couple $100 maybe. It's divided by the number of breads that you did purchase to get a average cost of the gluten-free product, which is $6.99 on that example. The cost of the non-gluten-free product, so gluten bread, is $3.49. And so the difference between $6.99 and $3.49 is $3.50. So you take $3.50 times 52 breads in a year, and it gives you $182 for the incremental cost of gluten-free bread in a year. Similar to rice flour and cookies. So we'll skip rice flour for a minute and look at cookies. So cookies are the same. So you bundle all your cookies that you've bought that are in similar packaging sizes, and you also add them all up to get the average cost of the gluten-free product, total the number of packages you purchased, get the cost of the non-gluten-free product, and then you get your incremental cost, times it by the number of items purchased, and you get your gluten-free incremental cost. Now, when it comes to flour or anything that is measurable by weight, I highly recommend you break it down into something that is easier to calculate, because if you think of Bob's Red Mill, their packages can be like 1.4 kilograms or 800 milliliters, 800 grams, or the cup for cup bread can come in a 2-pound package. They're all over the place, and it's really hard to group them together. So I generally take the flours, I put them all together, but I break them down into 100 grams. And then when it comes to getting the cost of a non-gluten-free product, I either look up the cost at a bulk bin place for the cost of gluten flours there, or I try and find the most expensive, no, not the most expensive, the biggest bag of gluten flour possible, hopefully on sale. And that's what I take a picture of or pull the information out of the flyer to use as my comparison cost, because it's going to come down as the cheapest non-gluten-free product. And so therefore, the cheapest non-gluten-free product against the average cost of a gluten-free product is going to give you the biggest incremental cost and your biggest claim for gluten-free items. And then lastly, under dining out, that's a total cost of what is paid for pizza crust and sandwich bread when eating out, and you get charged for the purchase of gluten-free products. So now we fill in the spreadsheet, which I pretty well just went through. I'm just going to go through this. So you list the names of the food groups. You count the total of each food group and enter it in column 2. You enter the cost of the non-gluten-free item in column 3. You add up the total paid for each food group and divide by the number in column 2, which is your average gluten-free item cost. Then you subtract column 4 from column 3 to get your incremental cost, and then you multiply the incremental cost by the number of items, which gives you column 6, which is your total incremental cost paid for that gluten-free group of items. And then lastly, for the incremental amounts paid in restaurants, you just enter the total amount as an incremental cost. So some hints. As I mentioned, group like items such as breads, cookies, crackers of similar sizes together. Keep itemized restaurant receipts if additional charges were made for bread or buns or pizza crusts. I keep an envelope of all my receipts for data entry, and I do my data entry onto my spreadsheet regularly. I actually do it monthly. I do know some people that do it after grocery shopping each week. I do know some other people that do it quarterly, but the key is to do it regularly. It doesn't take very much time. If you leave it to yearly, then it takes some time. And then for non-gluten-free items, this is where you have to get your comparison costs. So flyers and websites are pretty well the best way to go. So during the year, I do get flyers from Save on Foods and Safeway and Great Good Canadian Superstore. And I do go through those flyers and rip out different sales prices for different items. And I just keep them in a different envelope. And when I find something that is cheaper than I had before, such as the price of a gluten pizza, because these are all gluten-based products, cheaper, let's say I found a individual pizza that I want to compare to the Glutino pizzas, individual pizza that was on sale for $4, and now I found it on sale for $2.49. I'd get rid of the previous one and keep the $2.49 one. So that's where I mentioned about the clipping out. You need to date the flyer if you don't have a date on the flyer already, and add that to the envelope. You need to get the closest in weight to the grouped items. And if you can't, then you need to divide it to get it closer. So let's say cookies, you know, gluten-free cookies, let's say they're 8 grams, 8 ounces, and gluten cookies are 16 ounces. So then you divide the cost of the gluten cookies in half to get the comparison price for the gluten-free cookies. The best place that I like to do my comparison shopping, though, is Save on Foods online website. And what I like to do with that is I fill my cart with things that are on sale like once a month. I'll do this. I'll just go on their website, look at things that I'm trying to find comparison gluten costs for, fill my cart with what I'm trying to find, and then I print out the cart and then I delete the cart. So now I have a printout of all these gluten items, the date, and how much they cost. I can do my calculations right on that piece of paper. So let's say I find a 25 kilogram bag of flour. So I can break that down to 100 grams really easily on that piece of paper, and then enter it on my spreadsheet, the information for comparing the flour. So this is an example of a restaurant receipt. So I paid for $2 for a gluten-free bun at this restaurant. The one thing you cannot do is you cannot claim a gluten-free meal, because in general, a restaurant is going to make your meal gluten-free, and it's going to be the same meal that they're going to serve to other people, but they just made it gluten-free. And it's really hard to prove the incremental cost on that meal compared to the gluten meal. So only the incremental costs that you can see on a receipt like this are claimable. Actual meals for restaurants are not claimable. Okay, before we go into the spreadsheets, before we go into the sample spreadsheet, I see people have been raising their hands and asking some questions. I just want to be mindful of my time. I'm just going to check Q&A. Okay. Okay, I see the Q&A. Some of you are asking questions that are coming up in a little bit. So this is an example of, I've got 3 sample spreadsheets. This is an example of a sample spreadsheet. So you can see on the left side, the date, the store, and then the item. And so for each date, the store is listed, and then it runs across what gluten-free items were purchased. So there's containers of cookies and how many items were in. So it looks like cheese bites were bought for $34.98, and there were 6 of them. Another time, there's a baking mix less than 1 pound, and it was $40.49 from Betty Crocker. So though that's an example of someone entering in their gluten-free items. And then if you go down to the bottom where the blue marks are, you can see the gluten comparison, where it says for the Betty Crocker, it says Robin Hood for the baking mix. And I guess they've made a calculation that it is $1.3 or $1.30 for each 100 grams. And so therefore, that's how it's being calculated. I can't really see the full end of that one. Let's look at a different one. So let's look at the cookies. So they compared to Peak Freens, which were $3 for 300 grams. And 300 grams were similar to all those cookies in the container. So therefore, $3 times, man, I'm having a problem seeing right now, 84 cookies, if it says 84, is $252, and the gluten amount was $570.31 minus $252. So therefore, their incremental cost is about $300 for their cookies. So that's how that person's spreadsheet is calculating. If we look at another spreadsheet, this is an example of one person who posted it on the CCA Facebook page. She actually has this on her phone, and she updates it when she shops. So she's actually doing a item to item comparison. The only feedback that I have on this one is that the CRA rules state that you have to list the name of the comparison item and the date. You cannot estimate prices. So therefore, where she has normal price $8 for, let's say, the top item shortcake fries, she would need to list on the right-hand side more information about what the $8 is estimated from, or what the product is. Like the previous spreadsheet, which listed, Peak Freens $3 for however many grams it was. There is no estimating of prices. So one question that comes up repeatedly when we talk about this, especially on the Facebook group, is how much will I get back? So I did a little survey, and it seems that people get $901 and over when they calculate how much expense that they are incremental cost expense that they have is greater than $901 per person. So there's the little graph. The next one was $451 to $600 per person. So when I say per person and I say expense, those are the actual dollars that the incremental cost added up to. Now we're going to talk about what is a credit versus a refund, because people get really confused with this. So the gluten-free incremental food cost is part of the medical expense category, as you know, which is part of your income tax. It is called a tax credit. All your tax credits, such as person, education, pension, medical, are added up after you put your income in on your income taxes. Then you do your credits. And once your credits are added up, both federally and provincially, a percentage is applied to them. So for example, federally, you get 15% calculated from your credits. So if your credits are $10,000, you're given $1,500 as your credit. The federal amount is then deducted from your federal income tax payable to reduce the amount payable. So if I had calculated based on my income $4,500 payable and my credit was $1,500, I now have $3,000 payable to the federal government. Then the same calculation is done at the provincial level. So as I just explained, I'd have $3,000 left at the federal level. I would have a certain amount left at the provincial level, and the difference between the total of what is left to pay for taxes versus what was gathered on your paycheck is either refunded to you or you pay. So when people say, oh, how much did you get back, or how much money did you get, it's really hard to compare, because one, you don't know how much money people had withheld from their paycheck at their job. Number two, you don't know what other credits they had, because they all get lumped together when the 15% is calculated. And number three, you don't know what kind of income they have, which we're going to get into next. So here was the example I was just telling you. If you have $1,000 in gluten-free incremental costs, your federal credit at 15% is $150. And in BC, which is where I live, is 5.06. So you'd get $50.60, which totals $200.60, which reduces with your other credits your income tax payable. However, some people can or cannot claim this medical expense, and that is because this is a tax credit. You must have taxable income and have paid income tax to receive this refund. So, for example, myself, I don't have taxable income because I'm on a pension that's non-taxable. So therefore, my husband has to claim this because he has taxable income. I can't. So if I didn't have a husband, there's no point in me calculating this because my income is not taxable. Also, if your tax credits exceed your income tax paid, then no more tax will be refunded and your medical expense credits are not carried over to the next year. Some tax credits are carried over, such as education, but medical expense tax credits are not carried over to the next year. Next, and this is also something that confuses people, in terms of a medical expense, you need to exceed the medical expense deductible, which is 3% of your net income, or a maximum of $2,397 for 2020, before the credit will start applying to reducing your taxes. So basically, you have to have if your income level is $30,000 and your net income is $30,000, your medical expense will become $900. So you'd have to exceed $900 in medical expenses before it becomes a credit that you can calculate to reduce your federal income tax. Next, if you eat a natural diet and if you gluten-free labeled foods, the credit will be small, and so will your wanting to do this calculation, because it will be a lot of work for not very much credit at the end. And lastly, you can claim the credit for only those in your family diagnosed with celiac disease. So if the whole family is eating gluten-free, only those with celiac disease, the portion of food for those with celiac disease, can claim this incremental tax credit. So for example, my husband and I eat gluten-free at home. So every second box of pasta that we buy, I do not claim. So I buy my pasta in a box, 12 boxes at a time from Amazon. So every second time I buy from Amazon, I don't add it to my spreadsheet. And the other reason why some people cannot claim this medical expense is they do not have other medical expenses to claim, which does not get them above the medical expense deductible. So just some information about income tax in general. You can still e-file when doing this. I mean, this is just a medical expense. It's a single line on your medical expense list. So, you know, you've got dentist bills, you've got vaccines, or whatever your medical expenses are. It's a single line, and then it's a single number that goes to the CRA that says Lynda Neilson's medical expenses are $4,500 this year. And you can still e-file. It is recommended. No need to manually file your taxes. If you do, you have to send all your receipts in, and that's not fun. And that's the other key, is the CRA only sees your total medical expense amount. They do not see the fact that you're claiming gluten-free, incremental tax, dentist, everything that's in your list, unless they ask for an audit. You do need to keep your receipts and your doctor's note, the original doctor's note. No need to send it to the government unless they ask you to. And that they will ask you to when they decide to do a desk audit, which is when about $5,000 of medical expenses are claimed. And if you receive a letter from Revenue Canada questioning your medical expense deductions, this is what you need to gather. Your original doctor's note, which you should get now, not when you're audited, because sometimes a doctor wants to put today's date on it. And if it's got today's date on it, then you can't claim expenses for previous to today. All the receipts you use for your incremental cost calculation, plus the data that you use for comparison to the non-gluten-free item costs. and your spreadsheet, whether it be hand done or computer generated, to calculate the expense, and any other receipts they ask for, as they generally audit your whole medical expense category at once. So for example, I have been audited twice because twice my medical expenses have exceeded, or on my husband's return, have exceeded $5,000, and they want to see every single receipt. And it's a lot to photocopy and send along, which, as I just said, you have to copy them all and you need to keep copies for your records. So once they have that doctor's note with regards to your incremental cost calculation, you do not need to get another one from your doctor. Just keep the copy that you have. And if you're audited again, just send a copy with your next audit, because they do have the original one on file. So I called Revenue Canada like I do every year prior to doing a talk on this. And, you know, I go over with them, do you have any tips, suggestions, et cetera, as always, they say, do not estimate your costs, what you purchased, or non-gluten cost comparisons, or have receipts to back up your claim. So basically, don't fudge your numbers. And if you don't have the receipt, don't try to claim it. Don't try and submit this gluten-free expense claim if you have not been diagnosed with celiac disease. So basically, get a doctor's note, and if you can't get a doctor's note, then you should not be claiming it. Submit costs for non-celiacs in your family or for others. They said to me that, you know, through their audits, they're finding people are submitting for more than just the person who has been diagnosed with celiac disease, and that's just not appropriate. And also, if you're running a business, that's a business expense. It's not to be calculated into gluten-free incremental costs for a person with celiac disease. And then lastly, and this is a question I had that came up last year, if you're in university and you pay more for a gluten-free meal plan than other students pay for their meal plan with the exact same business, with the exact same benefits like breakfast, lunch, and dinner, then that is an incremental cost for the gluten-free diet. And so several people have asked in the questions about being audited. So what a desk audit is, they review each receipt and they will decide whether that receipt is valid or not. And if they don't like the receipt or that item or what you compared it to, then they will just take that receipt out. And they have the ability to audit you back 7 years. And that's just in general for income tax. So you do need to keep 7 years worth of data. And as I said earlier, you cannot claim for restaurant meals, including delivery services. So that's the end of the presentation. I see many hands up and 45 questions. So, Melissa?
Yes, Lynda?
Shall I start answering the questions?
Yeah, you're a pro at doing the Q&A, and we'll just be mindful of time. And I think we'll let people know that you know, we know it's 8 o'clock. We promised an hour. We'll go maybe 15 minutes, and then we can download the Q&A. That's why it's important for people to use the Q&A box. and we can see if there's anything unique to the presentation. I think, Lynda, you said you try and, gather those up so we can provide some answers.